farmers of the country. So we as a group of set of people decided to work in the field of agriculture, and being a set of bankers, it was much easier for us to start working in the field of agriculture. But the more we started dwelling into it, we understood that a lot of innovation is required. Just to give you an example, you take a farmer who is having a cow, his cash flow is on a daily basis. It gives milk daily. To a farmer who grows a sugar cane, it's a 1 year crop. So now, how do I offer a product to meet both sets of farmers is the key in this industry. I don't have a plain vanilla over the shelf, over the counter product, and I try to push it to the customer and not worrying about the cash flow or the margins what they have. It's not the same margin what they get. You sell a milk, you have a different margin. You sell paddy, you have a different margin. You sell sugarcane, you have a different margin. The cash flows are different, the margins are different, the crop cycle is different. And what grows in south, it takes 90 days. The same crop takes 120 days to grow in north. So that's the change which happens in this. So innovation is part of agriculture, I would say. And with respect to Samunnati, we have really innovated many small things. Innovation doesn't mean we have to send rocket to the moon. There are many people who would do that. Innovation is what is immediately required, which can be done in the easiest way. Is innovation is what we would feel. And we have done a lot of small innovations which could take care of a set of farmers. We are working with farmer producer companies where today we are trying to make them an asset class. As of today, most of the bankers are finding it difficult to lend because banks have certain rules and regulations. We respect that. At the same time, they are slightly bigger for microfinance industry. So they are exactly getting sandwiched between an MFA and a bank. That's a space where NBFCs, I feel, have a larger role to play. And companies like Samunnati are entering into that segment, and we are able to understand the needs of the farmer producer companies and structure the requirements based on the members, the activity, the geography, with the use of course, technology. I would definitely say that technology plays a key role. There are companies who predict what's going to happen tomorrow with respect to a huge rain. Then people can take protection of how to handle such weather conditions, to predicting the market that, barring the tomato scenario as of today, we would be able to predict to a large extent that when the produce comes, what could be the price. So it is better to hold or it is better to sell. So technology plays a huge role. Coming back to the most important part, the compliance part, I believe that compliance is part of any kind of innovation. So I was always telling Abhijit that it is like a brake in the car. You cannot accelerate without a strong brake. So now, the more you would like to accelerate, the more you would like to innovate, you should have a better brake. The brake is nothing but the compliance. So it has to come from top down. At org level, the leadership should believe that compliance is most important for organizations to grow, which is what has happened in the last couple of decades in the banking industry as well as in the NBFC sector, which we have all seen. And Samunnati is also following the same line, but every product is innovated with respect to the client's needs, keeping the regulator in mind and the compliance in mind, is what I would say. And I'll pause here, Abhijit.
Oh, thank you, sir. I think you brought out a very interesting point that don't try to build a center of excellence thinking of innovation. You don't need to do so much of effort. It's about simple things. I'll give a quick example here, having seen the microfinance industry so close and worked with it to grow it. So earlier we said poor is unbankable, right? Poor don't pay money. But what we did a simple product design change. We said doorstep delivery, right? We said break it down to small things, make the installment small, weekly. And it worked wonders, right? So simple innovations which really made microfinance clients as the most bankable clients probably today and the lowest default rate across any industry you can talk of. So that's what I think is the learning over the years. So coming back from a microfinance journey and retail finance journey, let's talk to Mr. Natrajan about to understand like his experience, because he's a global businessman, and he has dabbled in multiple things, including working from global corporations. He has also has his healthcare venture and multiple other ventures as well. And now in the last few years, he's gone deeper into retail finance and microfinance. So how do you see the innovations at the grassroots level, and what have you done from your organizational perspective to see there is a good convergence between innovation and compliance?
Okay. Good morning, everyone. Thanks, Abhijit and the organizers for having me here. Glad to be part of this panel. And I think the first gentleman spoke about, let's take N out of NBFC, right? Okay. And, in my view, and, for a country like India to really grow at really 7-8% to realize its own potential, I think the very, very healthy, I think it has to be really predicated on two healthy pillars. One is the very robust and healthy debt market ecosystem. That's where the financial services comes into play. And, NBFC, when you talk about NBFC, it's a product of innovation to start with, right? I think what NBFC did so far has been, it has unbundled, it has disaggregated some other services that were being offered only by banks, okay? And then really built very unique verticals. What Samunnati is doing, okay? And then housing finance, and especially after really 2011 of microfinance industry, I think innovation, has driven this NBFC. Talking about my own really industry perspective, just a little bit of perspective. The microfinance industry serves close to about 6.5 crore of households in the country today, right? And what was started off as a social banking, so to speak, has been mainstreamed as an industry and as a vertical today, right? And that's why if you see, we total our portfolio outstanding close to about really 4 lakh crores, 3.75 to 4 lakh crores, right? Out of that, almost about 55 to 60% of this portfolio is being held by banks today, right? So I think it has been really progressing very, very rapidly, okay, as an industry, and it has become mainstream industry, right? So from this industry, and I've seen myself, the lead time for lending to a microfinance customer used to be about 7 to 8 days, right? 7 to sometimes 10 days, right? I think now we are doing the loan in 1 maximum 2 days. Basically, we follow digital model. Of course, almost all the processes are digital, but we also really have a physical touch to it, because we serve the BOP segment, and also we are moving very rapidly also into the middle segment, right? Okay, so the innovation is evolving very rapidly, right? In the industry that we are part of, right? Okay, and then loan sizes are becoming much higher, right? Today we serve, and just to also give you a perspective where this industry can grow, and then how the technology and innovation is helping us is, today we are about 4 lakh crore, and we're going to quadruple this really this loan book, okay, over the next really 10-15 years, because you just take 6.5 really crore household, it's going to grow to really it's going to double, and then you take the average the loan book size of 50 or 60,000 rupees to 1.5 lakh crore to 2 crore, okay, 1.5 lakh to 2 lakh. So you have that 20-25 lakh crore kind of a thing. I know the whole NBFC Abhijit talked about in the introduction constitutes about 18% of the overall debt book, which is almost about 25 lakh crores, okay, out of the total Indian debt market ecosystem, right? So I'm saying over the next 10-15 years, okay, the microfinance industry itself is going to grow to 20 lakh kind of a crore loan book, right? So see, I think now right from the e-KYC onboarding all the way to the e-sign, right? Entire process of microfinance today has been digitized, okay, and then so that's why it's rapidly growing. I think if you take the NBFC multiple segments, the microfinance industry grows at much faster pace than the rest of the industry, right? So I think innovation is going to really, it has driven this industry so far, Abhijit, and it's going to drive, okay, at a much more rapid pace as we move forward. Yeah.
No, thank you, Natrajan. I think there's no doubt that the demand in India is never a question. It's a question of how we align ourselves to the growth of the industry. Now, we have another amazing speaker. He has done a lot of work on technology and compliance. He has worked in Muthoot, he has worked in ISAF. Now he's building his own organization. He has just taken over an NBFC, which is into gold loan. Now, I think your expertise has been also guiding entities on technology and compliance. So how do you see these, intersection of technology and compliance, which will ultimately make things much easier to do innovations and grow faster? Any thoughts on that side?
Yeah. Good morning, all, and thank you very much for the opportunity. We are building an organization, especially as an NBFC. We are focusing on gold loan as well as in microcredits, especially now in Kerala. We are planning to Kerala and Tamil Nadu markets within 2 years. Now we are focusing on, obviously, we are investing on the talents and the adoption of compliance as well as new technologies. Coming to adopting a technology, first of all, we need a thorough check whether the solution is at par with the regulatory compliance. That's a major point. We have to check whether the technology is compliant. And second thing, we have to pilot the project in minimum uses in all respect. And before that, we should train the entire team in a compliance as well as the technology perspective. The training should be at least in a half an year, within a quarter or half an year, it's must. And we have to deliver in a that means regulatory perspective angle to the users also, our relationship officer or the first touch. Anyway, we are using technology, but we are confident to use the technology in phygital way only. Okay, thank you.
So, no, thank you, Ajay, on your point. Now coming to a slightly different aspect to hear from Raman sir. I see we have only 21 minutes, so we want to make this hardly 3 minutes for each of us. See, the fintech world is growing by leaps and bounds, and this app-based lending is happening. So I know many of the technology providers are here and also probably fintech players here. So, sir, what is RBI's view? Because one side, Google app doesn't allow less than or recognize less than 2 months product, and then RBI wants to regulate the interest, but till now they have been silent on what is the right APR. So, how do you see RBI's approach to entire fintech lending, especially the small ticket, 2 months, 3 months, 6 months loan, which are really looks usurious for we old school of NBFCs. So what is the view of RBI? How they are looking at it? Will there be a regulation there, or RBI wants that over a period of time the industry regulates itself? How is that?
So you're right. Now, as we all know, technologies have always been a double-edged sword. Yes, it does provide a lot of facilities, but there is a flip side to it. So I remember that was in 2020, I think, when we met the governor. And during discussion, so this thing came up. And so he was very clear. So let's understand, it's very easy to at times criticize the regulator. So he was very clear what exactly is their viewpoint on this. Number one, the money flow has to happen between two regulated entities. That means the source could be a bank or an NBFC. And going into, if there are borrower's account, that's fine. Right? But any intermediary coming in the middle, be it a fintech player or whatever you may call, will not be allowed to appropriate money. That means you cannot route that money through any other account. So it has to flow from the regulated entity, be it a bank or NBFC, or if the fintech itself is a regulated entity. So, let me also clarify that RBI of late, if you see all RBI circulars, it tends to use this term as REs, the regulated entities. So what it's done is, because on one hand, RBI is currently in the process of harmonizing regulations for various entities. So entities could be commercial banks, small finance banks, cooperative banks, NBFCs, MFIs. So they all fall under the gamut of REs. So if the fintech itself is a registered NBFC with RBI, that means it is an RE, then of course the money flow can happen into its account. So that's number one. Number two is, of course, the ethics part of it. That means he said we need to know who is lending to whom. So the basic KYC norm, as we say, has to be there. So the idea was because we saw this certain spurt of lending apps happening, and the concern arose when it came to light that some of these so-called lending apps, one, you don't know what is their actual shape. Are they a company? If they're a company, then are they registered with the register of companies? If not a company, what is it? Is it a partnership firm? Is it an LLP? Or what shape it is? You don't know. Number two, who and where are the promoters? It came to light somebody sitting in Indonesia, somebody sitting in China, and there was a lot of money laundering happening, a lot of terror financing happening through this model. So that is where the concerns, and rightly so, of the regulator arise. Having said that, certainly RBI is not at all averse to regulation, innovation. They are very much for digital lending. And already we've seen RBI has come up with some of the norms on digital lending. And I think the crux is what I have just told you, that they say we can allow fintechs to play an intermediary role, because on one hand, if there is a fintech which is not itself an NBFC, then it has to have an arrangement with a regulated entity, that means a bank or an NBFC. And in that case, the behavior, the ethics part of that entity will be the responsibility of the concerned RE. So if I am a fintech and I have a collaboration with his NBFC, then my behavior will be his responsibility. So RBI has somebody to fall back upon. So that is the real concern. Otherwise it's like just shooting in the dark and you don't know. So apart from that, I don't see any negativity. There is enough scope, as I said, RBI, that's why they created a sandbox. So things are very fluid. They're ready to adopt change by the day, and we are happening. There were a lot of concerns about FLDG. RBI has also come up with specific norms on FLDG. Again, on FLDG, they had earlier concerns that how could we allow somebody taking guarantee who itself we don't know the entity, whether it is regulated or not. So what is the sanctity of that guarantee? So that's where they've come up with these norms on FLDG also. So I think there is no per se, let us not live in a concept that, misconception that RBI is against it. Not at all. Let me assure you, RBI is very much for digital lending, for use of technology. They themselves are heavily promoting technology. The concerns are genuine, that when it's question of money, and you just mentioned it's at the end of the day, it's a public money. It's your money, my money, that money which is flowing through various channels. So the money flow has to happen between regulated and known players. That is a very key basic element. Nothing rocket science in that.
Thank you, sir. It is very assuring that the way RBI is looking at this, and obviously that would allow more innovations to happen. Now, coming to this, new baby, which everybody is promoting very deeply, is called co-lending, right? And Gurunath sir, having done both wholesale lending and retail lending, and I don't know, many of you know, he's an amazing flute player. He has a YouTube channel as well where he has uploaded 60 songs. So, sir, how do you draw the right symphony? Being a flute player, how do you see the right symphony from a bank's co-lending approach and your own approach to build this together, keeping regulation in mind?
So one thing is the key in finance is continuity. Today, the biggest challenge for most of the, if I can use the word borrower, is they should know that whenever they repay on the tap of their mouse, they should be able to get the money back to do their business. The challenge what NBFCs and other companies face is equity. So the moment they are deprived of equity, banks hesitate to lend. So there is a gap. So the co-lending is a brilliant instrument where I put my 10 rupees on the table and the bank is ready to put 90 rupees on the table. So instead of serving 10 customers, I'll be able to serve 100 customers. So that is the future of the industry. I would clearly say that one is the BC partnership what Mr. Natrajan was referring to. The other is the co-lending, and co-lending is shaping up in a big way. There are two models. We'll not get into the detailing, but all that I would say is co-lending is the key, and in that how people are innovating based on their capabilities. Like somebody would prefer a 1090, somebody would prefer a 2080. It depends upon my appetite of how much equity I can put into the co-lending. And the second, the exposures banks can take in. For example, if you take Samunnati as an example, on the entire spectrum of from the supply side to the demand side, we lend to the farmer for a 50,000 rupee loan to an agri enterprises where I give a 10 crore loan. So the spectrum is so big. If my co-lending partner is ready to participate with me on either side, that would be wonderful, because I'll be able to take more exposures to customers. In agriculture, the timing is very important. I can give him more money, but if I don't give him on the right time. So education, hospital, agriculture, all these three need timely intervention. And there, this co-lending is going to be the future, is what I would prefer.
Thank you, sir. I think every bank is banking on that, and RBI is pushing every bank for that. Especially in public sector bank, there are separate, desks which are being created for just co-lending, or desks or departments. So now coming to, Natrajan, he used to be a cricket player, in his earlier young age, and a good player, of course. So a very state-bat answer from you, what I need is, now you are building your entity with two different things. One is on book, another is off book. So on book is much smaller than your off book. Now going by the RBI guidelines overall, that 50% asset, 50% income. So how do you address the issue of regulation, playing it very straight?
Okay. No, I mean, let's get this clear, and I'll come to my specific inputs on this. I think for a very healthy economy, it's all about making the access to credit available, okay, across the value chain, right? Okay. So what do NBFCs do, and then what do even some of the fintechs do is enabling that accessibility at a much faster pace, right? Okay. Now when we started this venture, right? Okay. Look at the flow. Commercial bank, okay, or a universal bank will lend to an NBFC, bigger NBFC, and bigger NBFC will lend to a smaller NBFC, and the smaller NBFC will lend to probably the end user, okay, be it a microfinance customer or retail customer or whatever, right? Okay. Now, what happens in the process is there is so much margin gets really built into the system, and then price, okay, to the end user gets really I mean, by the time the end user gets the loan, it's already very fat interest he or she is paying, right? Now, I think moving forward, in my view, okay, and though I'll address the compliance part on this, is for the ecosystem players to get together and make the access to credit, okay, easy and then faster, basically. So I think that's what the co-lending model is doing. That's what the BC partnership model is doing. Because I'll say at the end of the day, everybody has to be viable, and then everybody has to be efficient in the process. So the end user gets the credit at a much affordable cost, right? This is one point. Now, I mean, I'm a big believer, as Mr. Gurunath mentioned, the future is going to be one of partnership, okay, for the economy, because it's not going to be possible for one or two or multiple companies sitting at the top really doing everything. It has to be a really partnership model for us to really make the economy grow faster. And then I think digital models are available, which is making us which is making possible, right? Now, coming back to this point, I mean, how do companies really build a BC book and as well as own book, right? Okay. And then of course, there is a complaint from RBI that your other income should not be more than 50% of the total income, right? Okay. So we have a separate company to really book all the BC income, separately, basically. So that's what we do. And then just one other point, since we're talking about innovation and compliance and all of that, right? If you look at microfinance sector, you go back April 22 and back, okay, this was the most regulated segments, okay, in the entire financial space, right? Okay, your really processing fee would be regulated, your interest rate would be regulated, okay, how much you can lend to customers, was regulated, and then and then even how many really you should be the third lender, fourth lender, not beyond. I mean, we were almost really regulated to the bone to speak, right?
Your insurance was you
I mean, yeah, insurance, for example, what do you collect, of course, even that's a norm today. So basically, regulation always comes, okay. I mean, many mentions have been made about what we're dealing with is a public money. I think finance service is not anybody's individual money. What are the car of really a bank? It's about 9%. What are the car of an NBFC? Is about really 15%. So everything else is really somebody's money actually, right? So I think regulation and compliance is very, very important, okay, to really build a very healthy and robust ecosystem, right? I mean, I think without regulation and I'm saying, we were most regulated, and post April 22, like, there is a little bit of deregulation, so to speak, because after the industry has been mainstreamed, the health of the system is very good. So now the RBI took a call that, okay, like, I mean, interest rate is deregulated, processing fee is deregulated, right? Okay. The only criteria is like, basically the household income, and then you don't take more than 50% of the total really EMI. I mean, so I think even microfinance, compared to all of that, it's most regulated, but like, I think we were deregulated, so to speak, because once the industry matures, it's a cycle basically, right? Anything that gets started now, I mean, initially, like, you have to put systems in place, and once things mature, like, you really open it up, okay? So that's what I would say, like, regulation and compliance is very, very important element of building a very robust debt market ecosystem in India. Thank you.
Thank you, Rajan. So last question before we open up for question answer session to Ajay, because he has been a consultant on the technology and compliance side. Now, Ajay was also, if you are not aware, he was a state level badminton player, and so I think for any badminton player, it's always the best part not about a smash, but how do you build your defense? Because if your defense is not good, people will take points against you and win. So, as a technology consultant, what is your guidance for people who don't understand technology as much, that what we need to be careful about, 2-3 guiding principles when we are building our product and also the compliance side? What is your guidance on as a technologist? Maybe?
That's a good question. Like you referred, in badminton, if we are correlated the smash weekend with the technology help the organization or financial institution to grow the business model as well as in a fast pace. Okay. That in defense, we need the compliance to protect our business models, and end of the day, winning the game, likewise in the badminton itself. In choosing a technology or choosing any innovation that I already discussed in the introduction itself, we should go through a thorough check with the innovation or technology, choosing the technology through their compliance landscape, and we have to discuss. Like these forums will help to discuss the technology with our peers, experts in this regard, and should pilot the product within a very minimum users before implementing across our business model. You should choose a minimum 1 month period for piloting the product. We have to understand the 360-degree compliance, at par with the compliance, as par with the business, whereas the data should be shared, and with the clarity we are giving to our customers or stakeholders. Okay.
Thank you, Ajay. I think before I conclude, I definitely should have a question and answer, because there's an amazing gathering here. So, floor is open for questions, and you can direct your questions to the speakers, or it could be generic as well. One of us will be happy to respond. So, organizers, if there are questions you want to carry on the mic. Yeah, 5 to 7 minutes, I think we can extend that.
Good morning. My question is very pertinent to Mr. Gurunath of Samunnati Financing. I have been in agricultural credit for more than 2 decades in a public sector bank. Now I have my own firm. Well, the financing of agriculture has got a lot of uncertainties. A huge volume of money is required to compensate the losses, natural or man-made or whatever it is you call it. I understand, you have been telling very diplomatically, we have a system, we gone into the system of financing agriculture, that too in partly microfinancing, partly into identifying the right end user, associating with farmer producing organizations and all that. Is your real experiment with the farmers or agricultural financing is devoid of any NPA or any distress situation, sir?
See, like any lending business, we will have NPAs. So we are building a business model where I should be able to continue my business. If for a moment we decide that because of NPAs I will not work with a particular segment, then it would be difficult. One. Second, if you take Samunnati, because since the question is directed to Samunnati, I'm very proud to say that the decision by the company is to only work in the field of agriculture. So I don't have a choice. So tomorrow, even if my NPA levels are going up, I don't have a choice to change my path of working. So there I should find ways to see how do I manage my NPAs. So the one part is the answer what I was telling us on the co-lending bit. I have somebody who is ready to share the risk with me. Second, our deep understanding. Since you have been in this field for a couple of decades, you will really understand and appreciate that unless people spend time in this field, it would be very difficult to understand each and every commodity. And we are building that in the system over a period of time. But to answer your question, the NPS would not decide whether we would continue to work in the system or not. We would continue to support agriculture, and we will find ways to manage how if those situations arises.
Thank you for your reply, sir. One more small question, annexure to that. CIBIL impact on farmers. How do you handle CIBIL impact?
It is linked to the regulations. We are reporting in case people default, because we have to understand that credit discipline is different from what we are trying to do. If somebody has borrowed, it is their duty to repay. At the same time, how as an organization I am going to help him. For example, one crop, one cycle he fails, the account becomes an NPA. Let us stick to that. I would definitely report the client in the bureau report. But at the same time, I would see how I can help him for the next cycle, so that he makes better money in the next cycle and he is able to repay it. So that's where we are trying to play a different role vis-a-vis other organizations.
So on the whole, you are very satisfied and happy with the working with farmers of
Absolutely,
our country.
sir. Absolutely.
Nice to hear, sir. Thank you very much.
Thank you.
Good morning. I am Narayanan. Thank you. In continuation to his question, the moment the account becomes NPA, basically I am a chartered accountant, I do fundraising. The moment account becomes NPA, then you told you will try to assist those agricultural farmers. So in that case, will there be any upgradation in the CIBIL? Because the moment it's notified in the site, then its future is gone. To me, very, then you can lend. But what happened to this the mark in the CIBIL? Will it get upgraded to whatever is the category, or what is the process you adopt?
So I think of course, when he says hand-holding, see, let's understand. When you say CIBIL, that means the credit score or the credit bureau is what? It's a guiding principle to any lender to take a call. How risky is my borrower? Correct? Now, nowhere it is written that if the borrower has gone in NPA, you cannot lend him further. There is no norm. Let me tell you, all that the RBI norms say, that if an account has turned into an NPA, you need to make provisions as per the RBI norms. You have to sacrifice on your profits, correct? Nowhere RBI norm says that, for example, I am a borrower, my account for some reason, and in this case, the reasons are beyond my control, my account becomes an NPA with a lender A. That does not stop lender B to take a call on me.
Even sir, lender A can take a call if
exactly, as I said. Right? So nowhere RBI norms prevent lending to. Now look at the other way. Look at what about the people who do not have a score. So does that mean you cannot lend to them? If that was the vision, then NBFC sector would not have been born in India. NBFC's genesis lending is lending to the unbanked, underbanked, first time credit. So nowhere norms prevent you. these are all guiding principles for taking prudential measures to ensure that you have a healthy asset quality. Nobody stops you from lending.
If I can answer you in
There
a
are
minute,
stress asset companies also. Stress asset
I can
financing
answer you in
companies.
a minute.
Maybe you're
That's where the structuring is important. I don't give an EMI loan to a sugarcane grower and make him an NPA customer by design. I give him a long-term loan, ask him to only serve his interest if possible. Else, ask him to pay the entire loan with interest after 12 months. That's where the structuring and innovation comes into picture.
To also address what he's saying, let me tell you that whenever, so for example, recently also we've been voicing this concern that let's have a different set of prudential norms for small borrowers. How can you have a same norm for a borrower who's borrowing 50,000 versus a corporate who's borrowing 500 crores? 90-day NPA, 90-day NPA. Should that be the same? So the RBI's reply is that what exactly he says, you need to structure your repayment schedule because the NPA is related to the due dates. So if you can, at the time of giving the loan and by your understanding of the borrower, if you think he will be more comfortable repaying quarterly or maybe 6 monthly, you structure the loan that way. So to ensure that he is comfortable paying, and as somebody said, you could, that does not mean if I have fixed a repayment cycle of quarterly and the borrower has money, let him pay monthly. So as somebody mentioned, converting a EMI into a weekly thing, just turn the tables. So it's like, it's a calculated game which you have to take at the time of disbursing the loan based on the risk profile, the repayment capacity of the borrower, and how soon are his cash flows flowing.
Just a
No,
quick
I
comment
think
on this.
we are just
But,
time. Right. So, sir, we'll take it offline because I think, organizer, if you allow, we can go at another 5-10 minutes. It's up to the organizers. One question. Okay.
Yeah.
Sir, please.
Yeah, as an observer of the regulators for the last more than 3 decades, I have one observation to make, particularly in the context of what Natrajan said and Raman Aggarwal said, that in innovation and regulation, when we talk about this, the regulatory responses are like a sine curve. When innovation starts in any new sector, I think it is rather free. Even the regulators watch that for some time. If the pace and the volume of activity becomes high, then I think there is a quick regulation coming in, which is fairly stringent. And then it is observed over a period. And as the sector matures and attains certain self-regulation, certain discipline, and certain ground rules are well established, that is when the regulation really gets relaxed. I think that we have seen in the microfinance sector, which was very unregulated when it started with, then a clampdown because of certain circumstances of a very high regulation, and then again as it matures and ground rules have been established and accepted, then the relaxation of the ground rules. We have seen that in the fintech sector, and I think in any new sunrise sector where innovation happens, I think we will be seeing such a correlation between innovation and regulation.
True, sir. I think very well said. Sir, you are a veteran banker. If you don't know, Mr. Ramesh was the CGM of SBI, and then he became an entrepreneur, leaving SBI job much earlier. So I think it was wonderful to hear all of you. I think before I conclude, small thing. See, my experience on this is, I have raised more than 32,000 crores of capital, out of which 25,000 crore of equity for more than 180 companies. And I have an NBFC also, which lends to early stage startups, right? Very early stage. And 75% of my companies whom I lend to are loss making. So to answer your question, sir, the senior veteran banker, sir, these proposals banks will not take. So I think there also we have issues where people have done OTS and we have given them loan, because the intent is much more important than anything else. Our experience is only 4.5 years, so I can't boast of that we have done a great job. But having backed 196 companies till now, 196 companies till now, and 1,500 plus crores of disbursement, touchwood, my NP is 0 as on date, but no way that's a sign of how it will be in future. Lending business will have risk, and as Gurunath sir also saying, there will be NPAs, because whatever way you control, sir, Businesses are not Excel. It cannot be done on Excel. Realities are realities, and there will be challenges, even if the intent is good. So, sir, what are the learnings in this is very clear. I think, as Prahlad sir said, CK Prahlad, management guru said, we should be biased toward action. Instead of thinking that, we should only follow regulation and not innovate, I think, as Ramesh sir was also saying, we should be much more focused on innovation and biased towards action, because action is much more important, which will lead us to do many more things and not be just restricted by the regulation. Secondly, sir, we have to think of best practices to next practices. We have seen best practices. People are building best practices. But what could be the next practice? I mean, lot of learning. Like even in the fintech world, you see people are continuously innovating. So best to next practices. We have to think from a fintech to tech fin, right? We're talking of hell of on the side saying fintech, right? But how do you get into that tech integrates completely into finance? Because if you don't do that, you are thinking the other way. I mean, scale would be your challenge, right? So we have to also think of an idea of co-creation, because if you don't have client at the center, you see everything you're doing, you are making money because of your client. Let's be very clear. If the clients are not there, not paying your money, you are nobody, right? So how do we think of co-creation with the client? Understand the requirement, be very client-centric, think of products and services on that side, and that's what the innovation we are all talking about could ultimately, whether it is Samunnati or Natrajan, anybody for that matter, we have to think from a client perspective. Listen. It's very important to listen to the voices from the field. It's very, very important to listen to the field officers. I'll give without a small example to conclude here. There are a lot of things said about larger institutions, but I'll talk of one about Bandhan. And Mr. Ghosh used to have when he was growing the institution, every year in winter, he would have every weekend blocked for doing picnic with his team members. And the idea was about listening to the voices of the field officers. As simple. You will take all those inputs and try to see what can go wrong and try to build, resilience around that. So I think it's very important that you take those voices very clearly. We have to engage together. It is about collaboration, cooperation. It's not that you can conquer everything. So we have to think of collaboration and cooperation to grow together. Growth mindset is obviously important. I think with that, I would say that it is a privilege and honor to be with this amazing set of panelists. They're all stalwarts in their field. And thanks, Elets, to organize this. I'm super happy to be here and very happy to take any questions. All of us are very happy to take after this session as well. Thanks a lot.